Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. Bitcoin's recent price action has dominated headlines as the cryptocurrency hovers near the $120,000 mark, struggling to break through critical resistance levels. Despite facing nearly $47.5 million in liquidations that triggered a brief pullback to $117,914, Bitcoin remains buoyed by institutional interest. Sharplink Gaming's acquisition of 77,210 ETH, worth $295 million, exceeding Ethereum's 30-day net issuance, demonstrates persistent corporate demand for cryptocurrencies as treasured reserve assets. However, Ethereum's recent rally faces scrutiny, with active addresses and utility metrics lagging behind price growth. This divergence suggests that institutional inflows and ETF demand, which saw $1.59 billion in weekly Ethereum ETF purchases, may be driving this decoupling. As Bitcoin's dominance wanes, Ethereum has gained nearly 3% market share, signaling a potential shift toward altcoins. The imminent release of the White House's digital asset report on July 30th could act as a catalyst for broader market volatility, particularly if regulatory clarity or policy shifts are addressed. While Bitcoin and Ethereum command attention, altcoins like Aptos and Solana are making waves. Aptos, a high-speed proof-of-stake blockchain, has surpassed Solana in total real-world asset RWA value, becoming the third largest chain in this category. This milestone highlights the growing diversity of decentralized applications across chains, with Aptos leveraging its scalable infrastructure for institutional-grade transactions. Solana, meanwhile, has seen its DeFi total value locked (TVL) surge past $10.13 billion, a 41% monthly increase. Analysts project Solana's price could target $268 if key resistance levels hold, driven by renewed interest in high-beta altcoins as traders seek higher returns than Bitcoin's stalled upward momentum. This rotation mirrors broader market patterns, where capital flows into altcoins during Bitcoin's consolidation phases, often led by DeFi, NFT, and gaming sectors. Institutional actors are increasingly leveraging strategic partnerships to deepen their crypto holdings. Trump Media reportedly invested $300 million in Bitcoin-related options, aligning with President Trump's policy push for regulatory clarity through the Genius Act. This move underscores political and corporate alignment with cryptocurrency adoption, potentially boosting mainstream acceptance. Similarly, Quantum Solutions, a Tokyo-based tech firm, announced a $500 million fund targeting Bitcoin for treasury management, collaborating with TDX Strategies to optimize trade execution and custody. Such initiatives signal a paradigm shift where businesses treat cryptocurrency not merely as speculative assets, but as integral components of financial strategy, akin to traditional corporate reserves. Regulatory developments are reshaping market dynamics, particularly in Asia. Vietnam's Blockchain and Digital Assets Association rebranded to emphasize its expanded role in shaping national blockchain policy, aligning with the government's 2030 strategy to lead regional innovation. This institutional support contrasts with Hong Kong's upcoming Stablecoins ordinance, which introduces a licensing regime beginning August 1st. While regulators aim to streamline oversight, industry players must navigate compliance hurdles to maintain operational viability in the region. These contrasting approaches, Vietnam's proactive ecosystem development versus Hong Kong's regulatory tightening, highlight the fragmented landscape of global crypto governance. Stablecoins are emerging as a focal point for innovation and geopolitical strategy. CNY Coin, launched today on Atlantis Chain, aims to introduce a direct yuan-denominated stablecoin tailored for cross-border payments and DeFi. With Atlantis Chain's claim of 2.1 million transactions per second, TPS, CNY Coin could disrupt traditional settlement systems by leveraging speed and cost efficiency unmatched by Ethereum or Bitcoin. Tether, meanwhile, announced plans to launch a US-compliant stablecoin by year-end, signaling a renewed push to re-enter the American market after previous regulatory challenges. Both initiatives reflect broader efforts to bridge fiat currencies with blockchain infrastructure while navigating jurisdictional compliance, a critical challenge as stablecoins gain traction in global finance. Partnerships between major players are accelerating adoption. Bybit and Tether joined forces to drive crypto adoption in Brazil through educational campaigns, blockchain events like Blockchain Rio, and integrating USDT into tourism and retail sectors. This collaboration aims to leverage Brazil's crypto-friendly environment, with initiatives such as learn-to-earn programs fostering financial literacy. Parallel to this, Liminatus Pharma, a biotech firm, unveiled an ambitious strategy to launch a subsidiary focused on BNB investments, targeting up to $500 million in capital. This move marks a rarity for traditional corporations, reflecting confidence in Binance's ecosystem and the long-term potential of blockchain-based financial instruments. Advancements in AI and blockchain integration are redefining technical frontiers. Umio chose Avalanche to build the world's first decentralized network tailored for AI agents, enabling autonomous software entities with wallets, skills, and evolving metadata. This innovation positions Avalanche as a leader in supporting AI-driven ecosystems, where agents can operate independently in gaming, applications, and virtual environments. The integration of post-quantum cryptography in IoT nanosatellites through partnerships like EnduroSat and YSat.space represents another leap, ensuring secure and resilient communication systems amid quantum computing advancements. These breakthroughs underscore blockchain's role in solving real-world problems beyond speculative trading. NFT markets are experiencing a revival, with CryptoPunks sales surging nearly 590% to reclaim dominance. Ethereum's established network effect and liquidity continue to attract creators, despite competition from Solana and other chains. This resilience highlights Ethereum's enduring leadership in digital ownership and cultural artifacts. The trend reinforced by its brand recognition and infrastructure maturity. However, the rise of metaverse-linked NFTs could further fragment the market, creating opportunities for specialized platforms to capture niche markets. As this dynamic unfolds, the interplay between macroeconomic factors, regulatory clarity, and technological innovation will shape the crypto landscape. Bitcoin's struggle to reclaim all-time highs may persist as traders anticipate institutional flows and geopolitical developments, while altcoins leverage sector-specific tailwinds. The proliferation of stablecoins, AI F-chain ecosystems, and institutional treasuries reflects a maturing market where cryptocurrencies transition from speculative assets to integral components of global finance. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.